We've been approached by a Swiss private bank. They had their own offshore fund of hedge fund platform in the Caribbean. The problem was that they've been waiting too long. Many of the specialists had to leave or had left the bank, and the company, the fund platform, didn't have financials for 5 or 6 years, resulting in effect that the cash available for consulting was almost nil. So they couldn't approach one of the liquidators like the big four firms. They couldn't approach a law firm. They could actually not even pay us. I'm an economist by education, and I was always interested in the bigger picture and the more complex stuff. At Multiplicity Partners, I'm responsible for governance and advisory mandates. Together we have 17 independent directorship mandates. Majority of these is with me. I also look after pension funds where we do specific consulting in illiquid and impaired assets. That may be a sale of a legacy book or a valuation, or what we call hand-holding mandates, where we look after corporate action requests, valuation requests. We support the management because we are fully aware that illiquid and distressed assets are such a small niche that the investment teams typically don't have the time to look after that, whereas it's probably one of the most complex assets that they have on their books.
We provide a wide range of services to clients. So if a client comes to us, it doesn't mean that this client needs to sell an asset to us. It could well be that the client just seeks information which we can give to the client. We can, even when it's a very complex asset situation, we can try to shed light on that situation, that the client understands its situation a bit better, helping him to take a decision in the end.
In discussing the entire problem, rather than just looking at who can be a liquidator of the local entities, we figured out that we could create a win-win situation by offering a very low cash component in our compensation, but considering the potential recovery value of the blocked assets. The residual liquidity that was reserved for the clients rather than the liquidation could be immediately released. Clients had a chance to close the chapter 7 years after the financial crisis. After we paid off all the investors, we had to work with the Securities Commission of that specific jurisdiction to design the liquidation for the next 24 months, to transfer the assets into our own name, to close the legal entities. I think there was a dozen of entities involved in that fund-of-fund platform. And ultimately, we were able to conclude the project within the given time frame.